still putting pressure on the workforce. We just had trying to do too much with too few, effectively. I mean, all those mines were understaffed, certainly fully equipped, but understaffed. So being able to close 3 mines and redeploying the equipment and the people back into 4 mines, all of a sudden, we're starting to get some efficiencies.
Right, g'day, Money Miners. Welcome to today's news, Wednesday, 12th of April. Now, look, before I start, I just wanted to say something. There was some tragic news yesterday. There was a bloke passed away at Sunrise Dam. A medical episode, it said. Doesn't appear to be a mining accident, but look, I just wanted to mention that. My thoughts, condolences to all the family, friends, workers, and a special, I guess, a shout out to all the workers at Sunrise Dam. Look after yourselves and your workmates and stick together. I'm sure it's a very tough time they're going through there. So, look, thoughts from all of myself and the Money of Mine crew. So, lads, today we have got Westgold. We've got our first special guest come on. Wayne Bramwell, Managing Director of Westgold. So they've released a pre-quarterly today. Wayne's going to come on to have a chat, provide a bit of additional insight. We're going to drill in with a few questions. Really appreciate it. We've got Latin Resources. They've got the drilling results for lithium project in Brazil, and JD's going to unpack that company as a lithium project, and Trav's going to go in deep with Essential Metals, who are being acquired by IGO and Tianqi for their lithium project, 130k south of Cal. JD, Trav, gents, how are we? And Trav, Trav's mum is going off because Trav asked me how I am after I ask how he is. How are you, Trav?
I'm good. I'm making a point to say good today, or I could say well. However, yeah, Mum, shout out to you. I'm taking on your feedback to actually answer Maddie's question when he asks how I am.
So you can't just answer that one with another question. Is that the trick?
Is that like Trav trying to assert his dominance or something?
It's
like,
deflection.
I will ask the questions, thank
it's
you.
something like that, I reckon.
Yeah.
Well, if it was a mining question, I would ask you a question back if I didn't actually know the answer. However, I did know how I was feeling that day. I just didn't answer.
Yeah. JD, what's the goss, Cobber?
I'm excited to be here.
Mate, as I said, you've been, your missus says you're talking a bit more bogan.
Yeah, it sort of happens just hanging out with you guys too much, I reckon.
Me specifically. The bloke from Leonora.
Yeah, Broads has noticed a few more F-bombs coming out of my mouth lately too, mate. So I think that is your influence.
I think the missus reckons I've reduced mine, so you boys are... Well, I think we're finding a little equilibrium.
Evening it out, huh?
Yeah, no,
Finding
it's
a good
good.
balance.
It's good. Now, look, for the YouTube subscribers, thanks for subscribing. We've... just a note, we're going a bit of a different approach. We're going to split the episode up into clips. So there's going to be a clips playlist on the YouTube channel. So you want to look for each individual story. You'll find them as clips in there. And then there's the full interview playlist that has the full show, which has smack talk like we're doing right now. So that's how the YouTube thing's going to be happening. Pardon me. But let's get into it. Right, let's go. Righto, we've got a special guest, our first ever special guest on Money of Mine that's dialed in. And look, we've gone straight to the top. I'd like to thank Phil Wilding from Westgold Resources for teeing this up for us. Wayne Bramwell, MD of Westgold. How are you, Cobber?
I'm fantastic today, guys. Thanks for the opportunity to help out and chat. I've been listening to your podcast. I'm loving the colour and personality that you guys are bringing to that medium.
Oh, that's great feedback. We're pretty stoked to hear that.
Beautiful, mate. We're always glad to know someone's bloody listening to it. So, well, it's in line with your announcement today with your quarterly production results and seeing you trending towards upper level of guidance for FY23. Mate, well done on, I guess, the Westgold turnaround, the cash. You're in a great cash position. We've got a few questions to fire at you today from the Money of Mine team. Look, what have been the big, aside from the elevated gold price, I guess the operational drivers behind this cash turnaround for Westgold?
Look, thanks for that. It's been really simple. We've been on a mission here where simplicity drives efficiency, drives profitability. Last year we had quite a complicated business, a lot of moving parts. This year it's much simpler business for for us to manage and for the people to operate. We've gone from 6 underground mines plus a 7th in development last year, plus open pits, now to focus on 4 underground assets only. And that simplifying the business is starting to see improvements in inefficiencies and profitability. And
to a non-miner like me, Wayne, what is, when you say you cut down the number of underground mines, is it you're just getting benefits of scale there? Is it cost savings on diesel where it wasn't making sense before? Or what drives the efficiency improvements there?
Yeah, it's a really good question. It's actually both. I mean, last year, obviously WA COVID was still putting pressure on the workforce. We just had trying to do too much with too few, effectively. I mean, all those mines were understaffed, certainly fully equipped, but understaffed. So being able to close 3 mines and redeploying the equipment and the people back into 4 mines, all of a sudden we're starting to get some efficiencies. Instead of having operating teams which were 10 or 15% short, and more often than not now they're fully staffed and fully equipped, starting to find some momentum in the business. And also what we never did in the past was really leverage our scale. We're really now starting to be far more commercial in on what we consume and what we buy. And we're starting to play to our strengths now, which we are a mid-tier corporate, but in some sense we were operating like lots of different individual mines which were individually doing their own thing. Now there's a far more consistency across the organisation, and operating discipline is something we talk about every day.
Wayne, the Big Bell expansion, the announcement, the study you're looking at to go deep, go to the long hole open stoping method below the current cave, below that inconvenient dike that decided to be in the ground. Mate, could you give us a bit of a scope on that project, and especially, I guess, how you're going to look at managing the stresses at the increasing depth?
Look. When we originally started to drill deeper under the cave and we started to hit this pegmatite, we were a bit concerned about what would be on the other side. So
what's the lithium grade, mate? Is there any lithium in it you can rip out?
No, sadly, we have assayed for that like demons, and we've got, and there are not all lithium, not all pegmatites have valuable lithium in it. This one doesn't, sadly. So what it is going to become is pretty much has become an opportunity for us. Where it is at the bottom of the cave separates the ground stress from the cave to what's underneath it. So it's actually become like a crown pillar or a floor between the cave and the long hole operation we propose underneath. So what we thought was a problem is actually become a benefit for us, because it does separate the stress regimes between these 2 mines above and below.
And what's the long-term outlook? It's going to be a paste fill pillarless operation. Is that still the scope?
Paste fill. Yeah, basically we've been running paste test work now for some time. Those results have just come in, so that's looking pretty good. So really keep running the cave above, long hole open stope using paste underneath. So the study that we're doing now, this PFS, is really quantifying how we fill it and the costs and capital associated with what that long hole operation will look like.
Is there a time frame on when that study might be getting to the end or becoming where a final decision will be made?
Certainly. The plan as it is now is to have that available for board review during Q4, which we're in now. And I suspect, particularly after some of the drilling that we've done deeper below where we're currently projecting this long hole, I mean, that last drill hit 50 odd metres at 5 is really raising our expectations about that decision. I mean, our concerns over Big Bell are certainly diminishing, and that's a great place to be, because this was obviously a project which has had a long history. We didn't know what was going to happen underneath the pegmatite. We've now got far more clarity over a much longer term mine life there.
Well, it's your flagship producing asset now, and I guess it's all the hard work's paying off. Now, Wayne, the bankers I've got here are keen to grill you about the finance stuff, mate. I'll hand over the mining. Appreciate all the mining questions.
The mining questions inform the finance questions, mate. No, I appreciate you taking the time to speak with us, Wayne. Credit to you. And I'm pretty curious about, this strategy is focusing on less is more. And
you got it.
I wonder if that plays into your plans, if at all, for regional consolidation. The latest half-year reporting, you've still got shares in Alto and Musgrave, and I assume that they were strategic interests with a bit more of a potential optionality around some regional consolidation plays. Is that on the burner now, or how do you think about regional consolidation?
Look, we keep a weathered eye on our peers in the neighbourhood, and clearly those investments were made at a different time when we probably had a different view of what an economic scale mine looked like. For us, this FY23 focus is very much about cash flow or free cash, putting some more fuel in the tank, because I can just see broader and bigger opportunities emerging in the gold sector. I mean, the bottom line is, if you're an explorer in the space at the moment, between Q and Meekatharra, be very hard to get finance to build another mill. And we've currently got 2 large mills that are already paid for and operating. So I haven't answered that very well, other than to say that the immediate focus, free cash flow, puts some more fuel in the tank, gives us opportunities on a broader scale going into FY24.
Perfect.
That was a terrible answer. I know.
No, that's exactly how you expect the managing director to answer the question without answering the question.
Sorry about
that. You don't want to influence markets.
You've seen straight through me on that one.
I was being cheeky asking it.
I heard the Liberal Party's looking for a new leader. Wayne,
Are they still a thing? I don't know.
Well, I think the free cash flow idea does flow on well to what I'm going to ask you about. So just want to hear whether there's sort of plans you've put out to market regarding CapEx as that's sort of looking to come down over the next financial year, and how that looks over, say, the next 2 or 3 financial years, and flowing on from there, what that sort of looks like with regards to dividend policy or capital distributions in whatever form.
Okay, let me unpack that a little bit. A couple of the previous financial years, FY21, 22, Westgold had capital expenditures of north of $150 million for each of those financial years. We're sort of guiding towards sort of 60 for this year, and it sort of shows a maturing of the assets, and it's a key point in comparison to some of our peers. We don't have deep mines. We don't have mines that are 1.5 kilometres deep. Our mines are shallow, are reasonably young. We're fully equipped. So mobile fleet, we've got 131 pieces of heavy underground gear, which we own. We don't have massive expenditure planned for the next couple of years. I certainly won't guide towards capital for FY24 and 25, other to say that the days of us being north of 150 are behind us. The assets have had significant investment over the last couple of years, and we're starting to get the benefit for those investments now. Dividend policy, we did pay a dividend in FY21. I think we paid 2 cents fully franked. Would like to do that again. I think if we're successful, it's only fair to provide some more returns to the shareholders. So long term, the policy is 30% of our net profit after tax at full board discretion. But again, at the moment, that would be a first world problem to have a big pile to be sitting on a big pile of cash that we have optionality over acquisitions or investment in things like Great Fingal or expanding Big Bell or Bluebird faster, or giving some back to the shareholders. So that's where we're trying to get to a point where we can have those discussions about what are we going to do with all this cash.
Great, thank you.
I've got one more question, and in the last couple of days, Wayne, we've seen a few companies, they put out these quarterly production announcements, but it comes before the actual quarterly. And I think our listeners would probably appreciate just the insight as to the rationale when you're thinking about releasing these production numbers to the market before the actual quarterly comes out. What drives a decision like that internally?
Look, it's a fantastic question, and we've had this sort of corporate model, and we're no different than others, whereby, in my mind, you make the shareholders sweat for a month after the end of the quarter because it takes some time to get the financials together. I think in some sense it takes a lot of stress out of the process for shareholders and management as well, because you can reconcile your production within 2 to 3 days, or maybe 5 days towards the end of the month. So going early allows the analysts to get on top of your production sooner. It takes a lot of the stress and the anxiety of waiting another 26 to 30 days before your financials come. And from my perspective, it's just a step in trying to be more transparent with what we do here. try and keep a regular news flow, front up, good or bad, as quickly as you can every quarter. We set up these analyst calls and shareholder calls now whereby the Q&A function is we're getting really strong engagement with, and that's just building trust in the stock because people see us communicating better with the shareholders in the market.
Well, Wayne, mate, we're going to make a T-shirt for you since you're the first MD to dial in the history of the podcast, mate. Look, if we make the big time, that's going to be your claim to fame. If you even surpass your MD role at Westgold, I think, mate. So we can't tell you how much we appreciate you coming on for a yarn, mate.
And Wayne, my good mate Kenny, he's been ripping into me. When are you going to talk about Westgold? When are you going to talk about Westgold? Well, Kenny, we've got Wayne on.
We've taken it to a new level.
Thanks for your time, Wayne.
It's a proud day for me to be number one. Happy to wear the T-shirt and get some photos of you guys, but you're going to have to use a really soft filter on my head.
Mate, there's AI and stuff these days. We'll be fine. Well, mate, we'll head into West Perth and we'll catch you for a brew sometime, mate. Thanks very much for coming on.
Keep up the great work. Well done.
Good on you, Wayne. Cheers, mate.
Thanks again. See you later.
All right, good on you, Wayne. What a bloody absolute cracking bloke. What an absolute gentleman. So hopefully the start of many more MDs to come on the show. So
I think we got a medium here where an MD can come on and be relatable and talk to their investors just like a real person as opposed to via an ASX announcement. So we're keen to facilitate more conversations like that. So reach out to us.
And it's bloody free. Like, well, what more can you offer?
Oh, no, don't say that, mate. We want to charge.
For the moment. Wayne was free. They're all free at the moment. Maybe not forever. See how we go. Let's get into Latin Resources. JD, you've gone deep into Brazil, mate, which is well known for its fine meat and grills, but also is pumping out some lithium. Have you ever had a Brazilian barbecue where they pull the meat off the skewer and everything?
I have. I think there's a good restaurant in Subi that does that sort of stuff.
Yes. That would have been a good place to host this segment. But anyway, I'm fasting. I'm starving. Right, JD, Latin Resources, Salinas lithium project in Brazil. What's happening?
Yeah, we'll just unpack this a little bit. We're by no means geologists, and the company has come out with drill results today, but we're just going to try and put that in a bit of perspective with what the company's trying to do in Brazil. So they've come out with a few different holes grading about 1.5% lithium oxide at their Colina deposit. And this Salinas project is based around that Colina deposit. So that's about 13 million tonnes at 1.2% lithium oxide. But the prospect becoming a deposit just to the west, Colina West, has really caught the eye of a lot of people. And it's what they're testing now. So they're in the midst of a 65,000 metre drill campaign, so quite a huge one with 8 rigs on site. And 6 of them are testing that western area there. So the geologists are trying to test whether that pegmatite system all holds together and they can expand upon those 13 million tonnes. So
pretty much the exact same resource size as Mount Ida for red dirt. Their resource and pretty similar grade, 13 million tonne at 1.2%. So give everyone a scale of how big this thing is.
Yeah, and it's something I'll get into more because it's their goal to ultimately grow this quite a bit. So just a bit more background on Brazil. They're in the Minas Gerais region. No idea if I'm pronouncing that right.
Where's that, JD?
In the middle of Brazil, and that in Portuguese is actually mining related. That name comes from mining, so it's a very well-known area. Rio, Vale are all in there. Centaurus, another ASX play, are in that same region there. Good infrastructure, roads, power, water availability. So a great jurisdiction for mining by all accounts. So Sigma Lithium is the company that a lot of Latin resource investors hope to emulate one day. So they've got the Grotto do Ciriol, again, another one I'm probably pronouncing wrong, project about 75 kilometres away. And this is a company that's now capped at, in Aussie dollar terms, $6 billion. They're listed in Canada. So just today I read on the Financial Times that the company has received final approvals. They're going to be mining this week and shipping their first spodumene concentrate by the end of next week or the week after. So they're on the cusp of production now.
I think they're a lot bigger, aren't they? I think they're about an 80 million tonne resource.
That's right. They're significantly bigger, but interestingly, if you roll back the clock about 5 years, Sigma's very first resource was of a similar size to, like you said, Mount Ida, and more importantly, a similar size to what Latin Resources now has. So the plan, I think, and what a lot of investors are hoping for is that they can really grow that massively. So I think Sigma has provided a great precedent, and obviously the 5 years it's now taken in which they've grown the resource sixfold, built the processing plant, mill and everything, they're now on the cusp of production, was disrupted quite heavily by COVID as well. So the plans are, from analyst points of view and management, that 5 years that it took Sigma could be dramatically shortened, and depending on the scale of this thing, how Colina West turns out in the end, they could be in production by 2025. So key next steps for this company, resource upgrade. Everyone's really keen to see how this Colina West deposit ties in with Colina, whether it's all holding together. We've got the PFS coming out in the June quarter. The company said today they're still on track for that. DFS early 2024. And just one other thing I wanted to flag, and I think it's worth bearing in mind, that a lot of the analyst reports you'll read relating to this company are they're building in a lot of expectation about growing that resource. So a lot of the tonnage involved, our mentioned, is 20 million tonnes to 40 million tonnes. So that's about a threefold increase on the current resource. So for all new investors and experienced investors as well, they'll know that these stocks, when they're priced in the market, have a lot of expectations baked into them. So it might not be completely dependent on what the company comes out with, but when the expectations are high, the share price might not move quite as according to what you think, despite it being a positive announcement. So it's something I'm definitely going to follow, and keen to see how the results play out and how they impact the share price.
Do you see him as a bit of a, I guess we're going to talk about essential metals later. You've got Albemarle that have put the big takeover bid in for Liontown. They're obviously trying to sourcing raw materials to run these plants. So you've got Albemarle building a lithium hydroxide plant in South Carolina, I think. So they would be seeking raw materials, and South America is on their doorstep. Do you see them as companies like this that are heading towards production as potential takeover targets?
Yeah, that's a tough one. They're still at quite an early stage, and I think a lot of companies that are like senior majors that are following this story are waiting for that drilling to play out and see where it sort of goes from there. There's a lot of rumours that Sigma would be interested, but I think they've got a lot to focus on with their production starting this week, as I mentioned, to see before they get their hands dirty with another acquisition.
I think it's that timing as well when they're going through the PFS stage. I think trying to get funding during that stage until it's all very proven up. Like look at Ausgold, for instance, had studies for a while and they still can't get funding. So I think they're in that period of where it's going to be difficult to get funding until it's all proven up, isn't it?
Yeah, and like you sort of mentioned with Sigma, they're coming out of that stage and they're moving toward free cash flow production once the CapEx has been spent now. They're going to be generating money from this week onward, So for them, it would make a lot more sense, say, in a year or so's time, once they've built a bit of cash in the bank.
And God, we've gone from gold to lithium today. Trav, essentially.
Hang on. Westgold's not gold.
Oh yeah, no,
Sorry,
previous days, but we're doing a double bang of lithium here. So
Yeah.
look, it could have been, as he said, if that pegmatite dike was filled with lithium, imagine bloody how good that would have been for
Lithium
him.
day today.
Anyway, on to another lithium. We're going to your neck of the woods, Trav, in Kalgoorlie, 130 k's south. So essential metals. So October last year, pretty sure it was. So the JV between Tianqi Lithium and IGO, which is the JV that owns the lithium hydroxide plant that has been built in Perth. So they put a takeover offer in for Essential Metals. Trav, what's happening with this project, mate?
Essential have put out a quarterly today, and there's nothing new in this quarterly. Again, a great opportunity for us to talk about the deal and what it means more broadly, though. And this project that Essential have, it's like you said, 130 kilometres south of Kalgoorlie. Notably, it's in close proximity to Mount Marion and Bald Hill lithium projects. Just to give a bit of context to the money miners out there, this company was a genuine penny dreadful back in September 2020. I mean, it had a market cap of $10 million. You wouldn't go near it. And now, now you sort of look at it, and this takeover offer has an implied equity value of 136 million, and that's pretty damn respectable in a pretty short period of time. Of course, they've been the beneficiary of a fundamentally changing lithium market in the intervening time. The thing that I find super interesting about this company, when you compare it to that period of time versus this period of time, is that their resource actually hasn't grown. It's literally, if anything, shrunk a little bit because they're using a lower cutoff grade now, but it's still about the same size. So yes, they've brought out a study, and yes, they've converted some of that inferred more into the indicated category to support an actual mining plan. But as opposed to when Jonas was talking there, it was about having some expectation that things would be bigger and bigger and bigger. And in this case, that was never the case. This project was there was nothing more than there was back in September 2020, and investors knew that the resource was closed off then, and it hasn't grown at all since. So it's fascinating to me that you can have IGO and Tianqi come in and pay what they've paid, what they're going to pay for this company on a very sort of little change in the resource itself. So I think when you look at what IGO and Tianqi are jointly going to do here, IGO, it's their plan to manage the exploration, and there's 450 kilometres of tenure here. IGO, an amazing deal maker. Like, their M&A has been phenomenal historically, and they've created so much value via their really forward-thinking acquisitions. Exploration, not so great. So I'm not super optimistic about them finding anything new here. However, who knows? The other one too is IGO and Tianqi's Greenbushes is 600 kilometres away. And that is genuinely the best lithium mine in the world. And it's going to keep producing lithium for another 20 years. So they didn't need to do this deal, but it signals that they want to enter a new lithium province, and one that's a bit closer to Kalgoorlie, to me. And looking ahead, the scheme meeting is on the 20th, and this deal looks like it'll be implemented by May. The interest from majors in these sort of much lower end of the spectrum lithium projects, especially ones that have a mineral resource there, and there's not many of them, that interest has really grown substantially amid this supply concern.
So they, correct me if I'm, refresh my memory, were they talking about building a lithium hydroxide plant in and around that area to then ship down to Esperance? Was that on the scale, or am I pulling that from somewhere else? Because like talking about where, because this is right on the rail line to get railed down to Esperance.
The scoping study contemplates about a $230 odd million of capex, and included within there is a concentrator.
Yeah.
It's also something that Global Lithium, when they came out with their study about a month ago or so, had planned down to Esperance.
Yeah, because I know I'm pretty sure this is right on the rail line. So, interesting times. But it seems it's another one of those cases of just literally securing raw materials for these plants and this. So anyone that's semi-ready is getting as you said, they haven't grown the resource, but they've been taken over at a premium. So when's the takeover go through, Trav?
It'll be, the meeting is on the 20th of this month, and it'll be implemented by the 5th of May, but in their current documentation.
Yep. Beautiful. There's a bit of lithium fix for everyone. Recap on the other news, eh?
Let's do it, Matty.
Let's do it. Right. Glencore stepped up the bid for its takeover of Teck Resources. So they've changed the format a bit. So they've added US $8.2 billion in cash compared to the previous all-in scrip deal of $23 billion. Newmont share price fell 2.3% overnight. So you could hypothesise that shareholders thought the latest offer for Newcrest was too high, possibly. 29Metals, they've announced results from bloody mozzie going around my face. 29Metals have announced results from drill program at Capricorn Copper, so in Queensland. Program was completed to prior to the big weather event, but had some exceptional results. 228 metres at 1.2% copper, including 36 metres at 3.9%, but that's not true width. So it looks like it's going through the ore body at 45 degrees. So it's not a true width, just to note that, but still some exceptional widths of mineralisation, which is a new ore body trend, only a few hundred metres away from their existing workings. AVZ unfortunately remain still suspended from quotation. Meteoric Resources, they've completed the acquisition of the Caldera Clay Rare Earth Project. Now, just do yourselves a favour. Go see what Chuck Chunder on Twitter has to say about Meteoric. I won't repeat it on here. Hint. Beacon Minerals, they've produced 7,500 ounces of gold for the March quarter at a mill recovery of 89.2%. Gentlemen, that was sensational. Geez, I'm bloody pinging after getting our first MD on.
We're getting better, getting bigger.
How good's that? Well, the more MDs we get on that speak, that the listeners won't be turned away by the excruciating bogan accent of the host. Hope that person, whoever commented on that, I hope they order a coffee today and it's cold. That's what I say to them.
You're a cruel man.
Or they get a rock in their shoe. Doesn't that piss you off? Yeah, righto, guys. Cheers, Money Miners. And as I said, the feeds are still balancing out. The Google podcast feed is it's still with the two different feeds. Spotify's all good. Apple's all good. So there is a Life of Mine and Money of Mine. So all the old Life of Mine stuff is still there. So I'll put up some links once it gets all sorted. It's just going through that process at the moment. JD, Trav, gentlemen, it's been a pleasure.
Good work, guys.
Thanks, guys.
Hey, Ro.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation, or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation, and needs.